Ladies and gentlemen, welcome to the June edition of the Market Outlook, an Altech production. My name is Geraldo Ferreira, the CEO of Americas, and I'll be your host today. On this edition, we're going to talk about the June numbers and the outlook for 2024 of the global economy and the graphite electrode industry. The IMF update their forecast for 2024 in July about the world economic outlook. And according to the latest projections from the World Economic Outlook, global growth is expected to remain steady at 3.2% in 24 and 3.3% in 25, in line with previous forecasts. However, concerns are rising over service inflation, which is hindering efforts to combat disinflation and complicating the process of normalizing monetary policies. With upside risk to inflation on the rise due to escalating trade tensions and policy uncertainty, there is a growing possibility of interest rate remaining higher for extended period. In light of these challenges, policymakers are advised to carefully sequence their policy actions to ensure price stability and build up buffers to mitigate potential future risks. The IMF staff projections for 24 are based on an increase in commodity price, with non-fuel price expected to rise by 5%. Energy commodity price, on the other hand, are projected to decrease by about 4.6% in 24, which is less than previously anticipated in April on the World Economic Report, which is good news. This decrease is attributed to the high oil price resulting from significant cuts by OPEC Plus and ongoing price pressures from the Middle East conflict. Additionally, it's predicted that major central banks will continue to lower their monetary policy rates in the later half of 24, although the pace of normalization may vary due to different inflationary circumstances. Economic activity and international trade strengthened in the beginning of the year, driven by strong exports from Asia, particularly in the technology industry. The first quarter of 24 saw more growth than expected in many countries compared to projections from April. However, Japan and the United States experienced lower than expected growth. In the US, there was a noticeable slowdown in growth due to decreased consumption and a negative impact from trade. Japan's growth was negatively affected by supply chain disruption caused by the closure of a major car manufacturing plant. Europe saw signs of economic recovery, with service activities showing improvement. China experienced a boost in domestic consumption in the first quarter, along with a temporary increase in exports, meeting global demand. These developments have brought the economy closer together in terms of output as cyclical factors diminish and activity aligns more closely with potential. Now we're going to see the global growth projection by main regions and countries in the world. We're going to start by United States. The projected growth rate in the United States has been revised downward to 2.6% for 24, which is 0.1 percentage point lower than was previously projected in April. This revision is due to a slower than expected start of the year. Economists now expect growth to further slow to 1.9% in 25 as the labor market cools and consumption moderates, while fiscal policy begins to tighten gradually. By the end of 25, growth is projected to taper off to its potential level, closing the positive output gap. For Eurozone, it seems like economic activity has reached its lowest point and is starting to improve. Based on predictions for April 24, there is an expected growth of 0.9% for the year, an increase of 0.1 percentage points. This growth is mainly due to an increase in service and better than expected net exports in the first half of the year. The growth is projected to continue to rise to 1.5% in 2025. This growth is supported by higher consumer spending as real wage increase, as well as more investment due to easier financing condition and a gradual loosening of the monetary policy this year. However, there are still challenges in manufacturing, which may slow down the recovery in countries like Germany. For Japan, the strong shunto refers to the annual wage negotiations between enterprise union and employers in Japan. So the shunto wage settlement is expected to support a turnaround in private consumption starting in the second half. But expectation for 24 growth is revised downwards by 0.2 percentage point, with the downward adjustment largely reflecting temporary supply disruption and a weak private investment in the first quarter. For China, the revised growth forecast in 2023 has been adjusted upwards to 5 percentage points for 24, largely due to a resurgence in private consumption and a robust exports in the first quarter. However, in 2025, GDP is expected to decrease to 4.5% and continue to slow down over the next few years, reaching 3.3% by 29. This deceleration is attributed to challenges related to aging population and declining productivity growth. For India, the growth forecast has also been revised upward, in this case to 7.0% for this year, with improvements in private consumption, particularly in rural areas, contributing to this positive change. For Latin America, the economic growth expectations for 24 have been reduced for Brazil due to impact of the flooding and Mexico due to lower demand. However, growth projections for Brazil in 25 have been increased to account for reconstruction efforts post-flooding and positive structural factors like the increased hydrocarbon production. Middle East and Central Asia will face some challenges in oil production, and regional conflicts are hindering progress. Saudi Arabia's 24 growth forecast has been lowered due to extended oil production cuts. Sudan's growth outlook has been significantly decreased due to ongoing conflicts impacting the economy. Sub-Saharan Africa growth forecast has been also revised downward, mainly due to weaker than expected activity in Nigeria in the first quarter of the year. Well, now we're going to discuss about the commodities prices and trends in June and for the year. We're going to start with the Brent crude price, which remained relatively steady at around $85 per barrel, with slightly fluctuations as investors assess the impact of the recent attack on former US President Donald Trump and ongoing uncertainty over ceasefire negotiation in Gaza. Furthermore, it was revealed that China economy, a significant consumer of commodity, experienced a lower than expected growth in the second quarter, attributed to a persistent downturn in the property market, weak domestic demand, and escalating trade tensions with the West. The iron ore price, 62% content, dropped more than 20% since January, and data revealed that China economy experienced lower than expected growth in the second quarter. So this was attributed to an ongoing property downturn, weak domestic demand, and escalating trade tensions with the West. Investors now anticipation the outcome of a crucial political meeting in Beijing, with hopes of additional stimulus measures to bolster the economy. In the US, markets continue to assess the implication of the assassination attempt of US presidential candidate Donald Trump. Steam coal price, so Newcastle futures have fallen to around $133 per ton. This drought comes as China makes progress towards its climate targets and complies with stricter carbon regulations. In May, China coal generation share dropped to a record low of 53%, down from 60% the previous year, while renewable energy sources continue to grow. China also did not approve any coal-based steelmaking projects in the first half of the year, making a significant step since announcing its ambitious climate goals in 2020. On the other hand, coal-fired power generation in the US is expected to increase in 2022 and 2025 compared to 2023 levels due to a rise in natural gas prices. For scrap, CFR price in Turkey, price for Turkish imports of ferrous scrap have remained stable due to a combination of factors. This includes lower rebar sales in Turkey, decreased Chinese billet offers, and geopolitical uncertainty. Despite the firm collection costs faced by European sellers, and these issues have prevented any significant increase in prices. Nickel prices have dropped to approximately $16,800 per ton, reversing the previous upward trend that saw it reach a 9-month high of $21,615 per ton in May. So this decline have been attributed to investment funds liquidating long positions, influenced by stronger dollar and disappointing data from China. Aluminum in the short term has a cautious macro atmosphere, no fundamentals drivers, and low enthusiasm for capital entry, weighing on aluminum price in short term. On copper side, we see some inventory data from warehouse monitored by LME, COMEX, and Shanghai has shown a continuous rise through July. A decrease in GDP data in China, a major consumer of copper, has further dimmed the demand forecast. Federal Reserve Chair Jerome Powell also indicated Monday that recent data supports the belief that inflation is approaching the target rate and that the central bank is considering reducing rates before inflation reaches 2%. Lower US rates could potentially boost global growth and demand for metals. On zinc price, analysts report a decline of 2% in global zinc mine production for 2022, followed by additional 1% drop in 2023 and a subsequent 3% decrease year-on-year in the first quarter of 24. The market sentiment was bolstered by People's Bank of China, reaffirmation of its accommodative monetary policy. However, the gains were restrained as Chinese industrial production decelerate more than expected in May, indicating weak industrial demand following a downturn in manufacturing PMI. Now we're going to cover about the ferroalloys. So we cover in our outlook the silicon manganese and the silicon price trend. For silicon manganese price trend, the exports are expected to be impacted in the near future by a combination of declining demand and rising production costs. Nevertheless, there is a possibility of some support and price stability, potentially leading to increasing volumes. If the current shortage of containers ease, it is crucial to closely monitor demand trends, price of import ore, and logistic factors in order to navigate through this uncertain market environment. On ferrosilicon price trend, according to the latest assessment of July 8, the price of India's ferrosilicon showed no significant change week on week, experiencing only a slight decrease of $4 per ton. This stability in price can be attributed to a completion of deals at lower rates than those previously recorded. About the freights, recent ocean shipping rates from Asia have seen a significant increase. This surge in price is a result of peak season demand coinciding with capacity constraint and congestion due to issues in the Red Sea region. We have seen some prices since early May, an increase of more than 117%. Spot rate from Asia to North America West Coast have risen by 60% compared to their February peak, while prices to Northern Europe have increased by 80% since January. The rise in transshipment activity has led to an increase in volumes from intra-Asia and Asia, South Asia, Middle East routes, contributing to a higher ocean rates on these lanes. In May, intra-Asia volume increased by 14% year-on-year. Capacity shifts to the Red Sea and Trans-Pacific lanes, where rates were elevated, have also affected vessel availability to the Middle East. Congestion at the port of Singapore a key factor in the tightening of capacity since May, has started to ease, with vessel wait times decreasing to about 2.5 days from over a week in late May. Delays are partially due to vessel punching late arrivals, prompting the port to activate new berths to shorten lead time. In North America, Hurricane Beryl resulted in the closure of several Gulf Coast ports, including the port of Houston, which is expected to remain shut at least until next Tuesday. A potential strike by the ILWU Port Worker Union chapter in Vancouver was deemed illegal by Canada Industrial Relations Board. However, the board may soon issue a ruling allowing rail workers to strike potentially within 72 hours of the decision. On the global crude steel production, we have seen some mixed feelings where in May, the global production of crude steel for the 71 countries that report to the World Steel Association reached 165.1 million tons, marking a 1% growth compared to the same month 2023. The top 10 crude steel producing countries from January up to May. Chinese steel production has increased in May, but still below 2023. Year-to-date, May 24 versus year-to-date 23. So there is a decrease of 1.4%. On the other side, we see Turkish and India steel production continues to grow. For graphite electrode outlook, we have seen the price for China domestic needle coke stable for more than 2 months, actually. On needle coke demand supply, POSCO recently announced that aims to achieve annual sales of 11 trillion won for battery material, including cathode, anode, lithium, and nickel by 2026. The company plans to finish constructing facilities by the same year in order to produce 305,000 tons of cathode, 114,000 tons of anode, and 96,000 of lithium and 48,000 of nickel. On the graphite electrode demand supply, we see announcement of the Ministry of Economy in Japan, which released a statement declaring their decision to initiate an anti-dumping probe into graphite electrodes that were manufactured in China. And we come up to the conclusion of this market outlook for June, which is, according to AMF, global growth is projected to remain steady, which is very good news. Global economic activity and international trade strengthened in the beginning of the year, driven by strong export from Asia, particularly in the technology industry. Recent ocean shipping rates from Asia have seen significant increase. This surge in price is a result of peak season demand coinciding with capacity constraints and congestion due to issues in the Red Sea region. The global production of crude steel reached 165 million tons, marking a 1.5% growth compared to the same month in 2023. And graphite electrode demand and price is still under stress thanks to a lower demand of steel. Thank you for listening to this podcast and listen to Altec production, and hope that you listen the next podcast, which will be released quarterly now. And the next edition will be in October. Hope to see you soon. Thank you. Bye-bye.